Hello there. Today, we're diving into the exciting world of the federal funds rate. But don't worry, we'll make it super fun and easy to understand, just like building blocks. This little block represents something called the federal funds rate. Once upon a time, some very clever people came up with a special number called the federal funds rate. It's like a magical key that unlocks the doors to borrowing and lending money in the big world. But who were these clever folks who came up with such a fascinating idea? Do you know? Well, my friends, it was the wise people at a place called the Federal Reserve. They watch over the land of money and make sure everything runs smoothly. They came up with a target interest rate range. The target interest rate range is like a special price zone where commercial banks can lend and borrow their extra money to each other overnight. This price range is decided by a group called the Federal Open Market Committee. The Federal Open Market Committee, FOMC, is like the decision-making team within the Federal Reserve System, FRS, that figures out the game plan for money stuff in the United States. So commercial banks lend and borrow their extra money to each other? Yes. Interbank borrowing is like a fast way for banks to get money when they need it. Let's say a bank wants to fund a big project but doesn't have time to wait for deposits or loan payments to come in. In that case, they can quickly borrow money from other banks, usually at an interest rate that's the same as or higher than the federal funds rate. When the Federal Reserve raises the federal funds rate, it makes banks less interested in borrowing from each other. This means getting cash becomes more challenging. On the flip side, if the Fed lowers interest rates, it encourages banks to borrow more money and invest it more freely. This interest rate is like a tool the government uses to control how freely the US economy runs. By setting a higher discount rate, the Federal Reserve makes it less tempting for banks to ask for money from the Federal Reserve, but at the same time, it stands ready to lend money to banks if they really need it. Interesting, right? Now, how often do they talk about this federal funds rate? Is it every day, like brushing your teeth? Not quite. They talk about it every now and then, kind of like how you and I would talk about our favorite things. The FOMC, which is like the money bosses of the Federal Reserve, chooses a target federal funds rate 8 times a year. They make this decision by looking at how things are going in the economy at that time. But why is this federal funds rate so important, you might wonder? Well, let me tell you a little secret. Imagine you have a piggy bank, and you want to borrow some coins from your friend's piggy bank. The federal funds rate is like the price tag on those borrowed coins. If the rate is low, borrowing money is like getting a sweet deal on candy. But if it's high, it's like paying extra for your favorite food. Now, let's talk about the pros and cons of this federal funds rate. Are you ready? One big advantage is that it helps keep the economy balanced, like a seesaw at the playground. When the rate is just right, borrowing and spending are happy friends, playing nicely together. But sometimes, if the rate is too high, borrowing money becomes like climbing a mountain with heavy backpacks. It can slow down the economy and make it harder for businesses to grow. On the other hand, if the rate is too low for too long, it's like giving out too many candies at once. It might feel good at first, but it can cause some tummy aches later on. So, how does all this affect the foreign exchange, Forex, market? Is it priced into the market? The million-dollar question. So, imagine you're planning a surprise party for your friend. You've got all the decorations, the cake, and the presents ready, but you haven't revealed the big secret yet. Now, some of your friends might have a sneaky suspicion that something's up. They've noticed the extra giggles and whispers behind closed doors. Similarly, in the world of finance, traders and investors are always trying to stay one step ahead, like detectives solving a mystery. When it comes to the federal funds rate decision, it's kind of like the big reveal at the party. The Federal Reserve announces whether they're raising, lowering, or keeping the rate the same, and everyone holds their breath to see what happens next. But here's the twist. Just like your friends guessing about the surprise party, traders and investors spend weeks analyzing clues and making predictions about what the Federal Reserve might do. They look at things like economic data, speeches from central bankers, and even the latest gossip on Wall Street. So, by the time the official announcement rolls around, many traders have already adjusted their positions and placed their bets, like chess players making their opening moves. The rate decision itself might not come as a shock, because it's like the final piece of a puzzle they've been piecing together for weeks. Now, does that mean the rate decision is completely priced into the market, like a ticket to the surprise party? Well, not necessarily. Sometimes, the Federal Reserve surprises everyone with a decision nobody saw coming, like a plot twist in a thrilling movie. When that happens, it can send shockwaves through the financial markets, like a roller coaster ride of emotions for traders and investors. The market might react with big swings in prices as everyone scrambles to adjust their plans. So, while traders might have their suspicions and predictions, there's always room for surprises when it comes to the federal funds rate decision. It's like trying to guess the ending of a mystery novel. You think you know what's coming, but there's always a chance for a plot twist. Can we perhaps look at it a little differently? Yes, of course. So the federal funds rate in the forex market is like a dance between two partners on a global stage. Let me break it down for you. So, imagine the federal funds rate is like the conductor of an orchestra, setting the tempo for the music. When the rate goes up, it's like the conductor waving their baton faster, making everyone pay attention. Now, when the Federal Reserve raises interest rates, it can attract more investors to the US, like bees to honey. They want to grab a piece of the higher returns on their investments. But here's where it gets really interesting for the forex market. When investors flock to the US, they need to exchange their own currency for dollars. And what happens when there's high demand for something? That's right, its value goes up. Well, my dear friends, I hope that helps unravel the mystery of the federal funds rate. Just remember, in the world of finance, expect the unexpected. Until next time, keep exploring and keep learning. Thanks for watching and don't forget to subscribe.